Have you ever felt completely overwhelmed by investing advice? All these complex charts, fancy jargon, and secret strategies can make you feel like you need a PhD just to get started. Well, I'm here to tell you that the opposite is true. For most people, simple investing isn't just easier, it's actually better. Let's break it down. When you're new to investing, complexity is your enemy. It creates confusion, and confusion leads to hesitation, or, even worse, bad decisions. You might see a stock chart with 20 different indicators and think it's a sign of a sophisticated strategy. But really, it's just noise. This complexity often triggers emotional investing. You see a scary-looking dip and panic sell, or you see a huge spike and get FOMO, buying at the peak. Our emotions are terrible financial advisors. This is where a simple system becomes your superpower. Instead of trying to outsmart the market, you create a straightforward plan and stick to it. This is why I love simple, broad market ETFs, or exchange-traded funds. Think of an ETF like a basket holding hundreds, or even thousands, of different stocks. Instead of betting on one single company, you're investing in the entire market, or a large section of it. This automatically diversifies your investment and dramatically reduces your risk. If one company in that basket does poorly, it's balanced out by all the others. No more sleepless nights, worrying about a single stock's earnings report. Another trap of complexity is chasing trends. You hear about a hot, new tech stock or cryptocurrency that everyone's piling into. It's tempting to jump on the bandwagon, right? But this is often just a form of gambling. By the time you hear about a trend, the big gains have likely already been made, and you risk buying in just as the bubble is about to pop. True wealth isn't built by chasing these short-term fads. It's built through consistency. This brings me to my next point. Consistency will always outperform sporadic genius. You don't need to be the smartest person in the room to succeed at investing. You just need to be the most disciplined. Consistently investing a set amount of money every month into a simple ETF, no matter what the market is doing, is a strategy called dollar-cost averaging. It is powerful because it forces you to buy more when prices are low and less when they are high. It's an automated system that removes emotion and keeps you on track. It's all about long-term thinking versus short-term noise. The daily news, the market fluctuations, the expert predictions, most of it is just noise designed to grab your attention. Successful investors zoom out. They focus on the 10, 20, or 30-year horizon. Over the long run, the market has historically always gone up. By staying invested through the ups and downs, you give your money the time it needs to grow through the power of compounding. Ultimately, simplicity builds confidence. When you understand your strategy, you're less likely to be swayed by fear or greed. You know your plan is solid, based on decades of market history, not on a fleeting trend. You can set up your investments, automate your contributions, and then get back to living your life, knowing your money is working quietly and effectively for you in the background. So forget the complicated charts and the get-rich-quick schemes. Embrace the power of simplicity. Start with a low-cost, diversified ETF, invest consistently, and think long-term. That's the real secret to building lasting wealth. Thanks for watching. If this helped clear things up for you, give this video a like and subscribe for more no-nonsense financial tips. See you next time.